Hey guys, I'm putting this video out on New Year's Eve, and thank you guys for coming in and joining me. I appreciate it. This is going to be a pretty much data-driven video, not any images or anything of that sort. What I'm wanting to show here is I'm wanting to show what I've titled "It Has Begun," and what that is in reference to is that although it seems like we're kind of already, let's say, 7 months into this, I don't think we really are, as people think. So what I put here is housing is in trouble, even if we don't have a recession or economic pain. And the main gist of this is why lending rules home prices and sales. And so what that means is why lending rules over home prices and sales. And because regular media doesn't have enough time to go into great depth in regards to how lending works, so they just kind of gloss over it. And what I want to show you is, so as a lot of you know, I've been in finance for a few decades. I've been directly in mortgage financing for over 2 decades. And I've discovered there's 4 groups who buy homes, 4 credit groups. And something that's very important, it's not just a credit score. So you have Group A, is what I call them, Group B, Group C, Group D. And so we go all the way from 580 up to over 800. And what's important here is the credit score drives basically what the payment will be for someone. And, you know, they talk about discrimination in our country. Well, there's some serious discrimination because they discriminate on credit score. And something else I want you to know, something that really correlates, it's very rare that someone up here in the 720-800 has a very small down payment. They usually have 10-20%. And the reason being, their score reflects that they've had very few financial issues and that they've been able to save a large amount of money. So whatever circumstances have put them there has put them there. Whereas the people down here in the 580 to 639 score range, they have a hard time holding on to 10, 20 grand. Sometimes a hard time holding on to 2 grand. Sometimes just a lot of hiccups in life, right? Maybe you're helping family or you have a large family or something. So besides your credit score, there's also the down payment issue here. So right now I'm only going to compare people with the same down payment. Although I know almost everyone up here in the 720 plus credit range puts down 10 to 20%. So their house payment is even lower. But what I want to show here is a lot of people like to talk about how the market's only corrected 5, 6, 7% so far this year. And I want to show why we're only in the beginning stages of this. Hence, it has begun. The lending rules and standards are changing, and I won't go into great detail on that, but I want to show you how they affect the payment for people. So what has occurred is the interest rates were more compressed ever since late 2020 up until the beginning of this year, meaning someone with fantastic credit got one rate. Let's just say they got 2.75, and someone down here in the what I call Group D, the lenders don't necessarily group them this way, but it's very easy to see. This is how they break them down. Maybe got 3.125. So, 3/8 of 1% more is all they were paying. Well, I have a number of borrowers right now in this Group B and C. And now, so back here, it was almost an identical rate across the board. Therefore, very little variance in the payment for the different borrowers on this is the median priced house in America. I know in your area it may only be 250, 300, and there's some areas where it's 6, 7, 800,000. So then this number changes dramatically. So this payment, borrower payment, principal, interest, taxes, and insurance is only in relation to this average purchase price across America. So as you can see, back in January, when houses were around 380, the A borrowers paid $19.70 a month on that house. which is right in line with national average rent. So, of course, these people are going to run out and buy. You can buy a home for the same as rent, and $400 or $500 of your payment is going towards principal each month. Plus, it's your own house. Even all the way down here to Group D, 2120. So they were only $150 more a month back just January of 2022. Now, as interest rates started to climb, they didn't keep the same lending standards. They started increasing interest rates more on the lower tier borrowers, as well as the mortgage insurance rates, if you're not putting 20% down. So what started occurring, you can see here, when we peaked out in May, the national house price in May was $400,000 is where it peaked out. A few of them said like $398, some said $402 and stuff. Rates had creeped up to 4. So for the A borrowers, they were now looking at, we're talking about the same house here, the same house going up in price. So we're not talking about the same priced house, the same house. That only used to be $300,000, now up to $400,000. Their payment was $2,310. So a little bit of pain there, right? They're paying $340 more a month, but still a decision you could make. You know, hey, it makes sense we buy versus rent. And as you can see, the other tiers started having a much greater disparity in their payment. Whereas back in January, the D category was only paying $150 more a month than A. By May, they were paying $340 more. And as you get down here into October, so October house prices dropped from May to October, while interest rates climbed all the way to 7%, 7.25%, 7.5%. I just kind of chose the October average. You now had this A borrower paying $2,760, almost $800 more a month. And as you can see, these other tiers were paying even more. We crossed the $3,000 threshold for category C and D. And a lot of people in that category only make $6,000, $7,000 a month. And I shouldn't say only, make $6,000, $7,000 a month. So to commit $3,000 to your house is basically financial suicide. So the market really put on the brakes there. Everybody started seeing that. House prices started coming down. In December here, we had a little pop up. We're back up to $360 for the median house price. So we're 10% off the high. We're up a few percent from the previous year. And rates, they did come down to about 6.25, but they have since bounced back up to 6.5 for the A borrowers. I have someone right here. Great borrowers, great income, great everything. Just they have just kind of some weak credit issues and nothing that they could really cure in the short term. It's just where they're at. They actually have a 675 credit score. The interest rate I'm getting quoted for them is 7.625. An entire 1.125 more to be here versus here. Whereas back here they could get like 3.25. So their payment now is $2,930. And out here at D, they're at $3,050. And what I put down here was housing cost increase in 1 year. And this is on the same house. So since January to, we're going to flip over to January 23 here. The A borrowers have experienced a 34% increase in their housing cost. While you get down here to category D, they've experienced a 44% decrease in their buying power. So these lower tiers have just dropped off the map of wanting to be buyers because it's just not mathematically feasible for them, even if they would want to or like to. So, and this is why we still have crazy low unemployment. The stock market has only retraced about 15 to 20% of its gains. And, we're at 6.5. The interest rates, what if we go back to 7 or 8? How much more will this impact it? So what I put down here is, do you really believe everyone had so much money left over every month a year ago that their house payment could go up 34 to 44%, and they're just going to continue buying as they were. That's why I made the call back in January, February of this year. I said housing sales nationwide were going to drop to very low levels. I felt definitely under 5 million units, possibly under 4 million units, which is actually a crazy call because all of the 2000s, early 2000s, we were in the 6 to 7 million housing units being sold every year. So to have the population increase but have the transactions decrease by 30-40% is going to be very dramatic. Now, if we throw into the mix a recession or economic pain, what's going to happen from there? Like, it's going to keep creeping up. Right now, basically, A and B borrowers are almost the only ones buying. And that's why sales are down 30, 40, 50%. But if interest rates keep going up or we have an economic pain, we may start seeing 50, 60% decrease in sales. And prices are going to start suffering. This is a payment people had been accustomed to for about a 2-year period. Ever since 2020, houses were costing around $1,800 to $2,000 a month, and a lot of people could pencil that out into their budget. Now that we're up here to $2,650 for the A borrowers and $3,050 for the D borrowers, it's just not an option. So do we have to come all the way back down here to $2,000 house payments? Because if we do, and interest rates stay up here in the 6s or 7s, we're talking about a reversion in median house price that would be a drop of around $100,000 from here to get us back to these $2,000 a month house payments, where then you would start seeing people shift back over from renting to buying. And if you want to know the truth, that's what I am leaning towards, thinking that may occur. All at once, no. And there's always reasons to still buy. Maybe this A borrower right here with the 2650. Let's say let's say it's a 4-bedroom house, and you can't even get a 4-bedroom apartment. So a 3-bedroom apartment's $2,200, right? So they can get a 4th bedroom for $2,650. They're in the 30% tax bracket. So after the tax credit they get for owning, it brings down their true cost of the house to only $2,000 a month, and it makes sense still to buy versus rent. And that's why it won't go to zero. People think it'll crash. I don't think we'll get below 4 million units, which is still a very low number without something major happening, because you're still going to have these group of people choosing to buy over rent. So thank you very much. I hope you have a happy new year. Reach out to your family and loved ones and friends. Everybody always could use someone else saying hi, giving them some encouragement, wishing them a good new year, and rooting for them. So this was just a little video, kind of, I guess, a downer for the end of the year, but I also wanted just to make it a reality check, right? I want you to understand how the payment has changed for people in 1 year and why they're not going to just hop right back in. I mean, asking someone to kick out $3,000 for an average house a month, that's before utilities. That's a hefty payment. So sorry, got back off track. Happy New Year. Wish your friends and family good blessings, and reach out to them. Let them know that you're thinking of them and you care about them. All right, thanks guys. See you in the next one.